Good day, fellow investors. When you start investing, it is good that someone tells you what to expect from investing after all. There are good times, bad times, 10% per year. Let's discuss. So, the main mantra when it comes to investing is that stocks give about 10% per year. So, that is the average. And you think, whenever I put my money into the stock market, I'll be doing 10% per year. 10% per year is not bad, so why not just splash our money in stocks? Also, when you look at predictions, Credit Suisse at the beginning of the year, 4,700 points for the S&P 500, 10%, 10%, 10%. Goldman Sachs, it was 4,000, then it increased, so nothing wrong with that. Always in the positive to make customers happy. Also, if you look at 200 years of stock market history, then stocks just go up, always, nothing wrong. 7% real return plus 3% inflation, and you get to 10% from investing in stocks. Everybody happy. It is much better than bonds, bills, and especially US dollar or standard currencies. So, what's there to talk about? Stocks go up 10%, just put your money there, forget about it, and every year you have 10% more. Not that fast. The first thing is that if you look at long-term real annualized returns, if you look for the US, yes, over the last 120 years, that was 6.4% plus free inflation on average, that is your 10%. However, here you have 25 indexes, so to nail those 10%, you need to nail the top 4 out of 25, 26, how many there are. Now you have many more indexes. This was from 100 years ago, so those that survived. Not that easy to just invest in stocks and forget about it. The first step is, okay, nailing the right one. Then there is also something else, and we'll discuss whether the S&P 500 is the right one or not in a moment. When it comes to investing in stocks, yes, stocks go up, but there are very long periods when stocks do absolutely nothing. 0%, 17 years, 12 years, and now we are already 2 years in the making of the maybe next long-term cycle where stocks do nothing for longer. But you will see that is an opportunity for us if stocks do nothing, because just 2 years ago everyone was crazy about the stock market. Now the 2 years no returns, not that much. And if you just look below Google Trends, interest over time for Tesla stock, now it is at 26, which is a quarter of the 100 that it had been reaching in the past. That's normal with people. People like to see stocks go up, but investing is about something else. And therefore, I think I have to give a warning to new investors that the stock market, as we have seen in the last 2 years, is not something that goes up 10% every day. It is something that slow and steady does well, but you need to have the right strategy. And you need to have the right expectations. The Nasdaq index crashed 74% between 2000 and 2002. The S&P 500, the one that everyone is touting now, crashed 50% between 2007 and 2009. This means that it can happen again. If you invest in individual stocks, 3M crashed 63% the last 5 years. Such a great, renowned, stable business. Nvidia crashed 64% in a year only to rebound double the previous peak. That is investing, but you cannot know what will be the next period. That's why I just saying you need to be ready for this and also to be ready for this or even this. Whatever happens, if you're ready, it will be good for you. And actually, bad times, real times where stocks do nothing for a decade, is something that benefits you more than the Goldilocks periods that we have enjoyed from 2010 to 2020, where stocks just went up, up, and up. What am I saying here? I'm saying, as Warren Buffett says, when stocks go down, it's good news. So when stocks go down, it's good news. Why? Well, imagine this is the S&P 500. Imagine investing it now that stocks went nowhere for 15 years. Now, the dividend yield, all else equal, would be 8%. I think currently at this level is 1.5%. What's the difference investing and reinvesting money at 8% versus 1.5%? Logically, what would you choose? 8% for the businesses, the same businesses, or 1.5% for the same businesses? Of course, at a lower price, you get much more of those businesses. If the S&P 500 would be 700 points now, you would get 6 times the business ownership by investing the same amount of money, let's say $1,000. You would get 6 times the ownership, 6 times the dividend, and that is why Warren Buffett is saying that when stocks go down, it is a good thing. Also, when it is better to invest, when things are ugly or when things are great. Just look at the returns later. Great, ugly returns. Great, ugly returns. Bad times, great returns. Bad times, great returns. Bad times, financial crisis, great returns. So, if you are accumulating wealth over time, lower is better. But if you're just starting investing, we cannot predict what will happen, so you need to know that even bad things will happen in the stock market. Ray Dalio says that any asset class will crash 70% once in your lifetime. Of course, the higher the price is, the higher the chance is that it will crash. So one later, as you grow as an investor, try to understand those things. Forget about the bubbles, as we have seen earlier, but we must be ready to take advantage of ugly times. So if you're just starting to invest, we cannot predict what will happen next. But I just want you to be ready for ugly times, invest more, no matter what the strategy is, and that is the best message I can give you. For now, if we look at the S&P 500, at these high levels, returns will likely be much lower than the historical 10%. With ups and downs, we are more looking at 5% going forward. That is the S&P 500, and then it's up to you to see whether you can find better or you're happy with this long term. The key is that if ugly times come, you invest more. Why? Because if the S&P 500 crashes 50%, the current 5 become 10%, and that is what makes your long-term investment. So the strategy is that we cannot predict, but we can be positioned in a way that whatever happens, we are ready. And if that is our right strategy, then whatever happens, you will be okay. And that's the key when it comes to investing. Hope you're enjoying the free stock market course. Join it. See other videos, all in the link in the description below.